It's about that time of day again. Welcome back to your Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, October the 4th, 2016. Sorry I missed you guys last night, by the way. But we've had a wacky first week of October. But looking at the charts tonight, it's easy to see some reliable trading opportunities going into tomorrow's session. Crude oil is bullish, working its way back to retest the highs of a somewhat lazy bull channel. The E-mini S&P is bearish and trading with multiple levels of resistance overhead. Gold is bearish after a runaway session today, as sellers are desperately trying to finish off a wedge target below. And the euro is bullish and trying to retest the highs, but the sellers appear to be digging in their heels into the low of a bull channel and looking for a trap before we get there. I got a great newsletter in store for you guys tonight. Plenty of reliable opportunities setting up for tomorrow. Before we jump into our charts, though, I do want to remind you, the only place to watch the full-length version of this newsletter video is here on our blog at sidewaysmarkets.com. If you're not watching the video right now on the blog and you're watching it on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. It'll send you over here to the blog at Sideways Markets where you can watch the full-length version if you're on the YouTube channel right now. While you're here watching the full-length version, don't forget, join the newsletter list. I'll send you an email every evening, Monday through Thursday evening when this newsletter goes live. Download those charts right below the video tonight. That link says click here to download today's charts. You can download all the charts you see me using in tonight's video and have those ready for your trading day tomorrow. In the upper right-hand corner, don't forget, if you're not a member here at School of Trade, I got a free pass for you. Come out and test drive the trade room. Grab your free pass in the upper right-hand corner. And, of course, as always, I remind you guys, we've got more information here about our trial membership, member reviews, and, of course, a great chapter on our frequently asked questions, right? Don't forget to check out the frequently asked questions if you're brand new. And if you have any questions for me, I'm always here standing by to help you guys out 24/7, 365. I've got live support on the blog and, of course, on the homepage at SchoolOfTrade.com. Like I said earlier, I apologize for not being here with you guys at the end of last week and, of course, last night's newsletter. But let's get right back to the action here. We get the first week of the month of October. You know, this time of the year, like I always say, September, October, November, December, January, February, into the third, fourth week of March. These are the times we get the most amount of volume, the most amount of volatility, and of course, it definitely has not been letting us down here so far this week. This first week of the month of October reminds me to go out and make sure I get my Halloween costume ready for the end of the month. Before we get there, though, let's check the schedule for tonight and tomorrow. Looking at tonight here, Tuesday evening, we got some news coming out of Japan, and of course, our good friends down under. We got the composite sales and retail sales at 8:30 p.m. tonight. That should definitely get things moving here in the overnight Asian session. Then you'll notice here, I have a peppering here tomorrow coming out of the London session. We're going to hear from France, Germany, the EU, Great Britain, and of course, right back to the EU for retail sales. We're getting some lingering stuff here this week after the post-Brexit, so be aware this news is probably going to be secondary to the Brexit news we heard from last week. But we do have, like I said, a peppering of news tomorrow morning in the London session. If you guys trade in the London session with us, don't forget, you got some major news tomorrow morning. The U.S. session tomorrow, jumping right on down here, of course, we have the 8:15 employment report tomorrow morning. This will be the leading number here ahead of the non-farm payrolls on Friday. We got international trade at 8:30, so 8:15 and 8:30. We got some merchandise trade at 8:30 a.m., and then, of course, on factory orders, ISM non-manufacturing at 10 a.m. And then don't forget, tomorrow's a Wednesday, which means we do have the inventory report tomorrow morning at 10:30 a.m. So looking at the U.S. session tomorrow morning, big blocks of news there at 8:30, 10 o'clock, and of course we can't forget about the petroleum status report at 10:30 a.m. So whenever we have a Wednesday with inventories, if you're trading crude oil, and usually the S&P will react pretty well from the inventory report right now. Crude, of course, been kind of a leading indicator of the S&P on Wednesdays, so we'll watch out for that tomorrow. But whenever I know we have Wednesday inventories, I know it's going to be an early in, early out scenario for tomorrow morning on crude oil. So if you're trading crude with us tomorrow in the trade room, make sure you're in early, out early ahead of that news report. Give it some time for that news to whip around, and then typically speaking, you're going to get that late morning push 10:45, 11 o'clock, 11:15 before we go into lunchtime. But as you can see here, though, a ton of economic news here tonight coming in the Asian session from Australia and Japan. Tomorrow morning, tons in the London session. Then, of course, with us tomorrow morning in the trade room. We open up at 8 o'clock Eastern time, and we've got 8:30, 10 o'clock, and 10:30 news tomorrow. It is bound to be another great session with all of our students tomorrow for Wednesday, October the 5th. Tons of news tomorrow, and everybody's got their eyes on that non-farm payrolls the first Friday of the month. We'll talk more about that, of course, later on this week. Probably tomorrow night, we'll start talking more about that because, of course, Friday is going to be your non-farm payroll number, which means that's going to quickly start to take center stage here, usually not until the latter side of the day on Thursday. So we'll talk more about that tomorrow on Wednesday evening's newsletter. Make sure you're prepared for tomorrow. Lots of news tomorrow. Let's jump into some charts here tonight. Boy, oh boy, what a wild session across. Crude oil was pretty much the calm market here today. Market's really reacting. Wait till you take a look at gold taking a nosedive here today. Crude is bullish, working its way back to the highs of a somewhat lazy bull channel with a target up at the measured move, which they really haven't been able to get to yet. We'll see how this thing sets up in the next few hours in Asia. The bulls look really strong coming off the API report this afternoon, but the reversal line analysis reminds us that trying to buy high will be lower reliability. It's going to be challenging. It's going to be challenging to get a reliable trade buying high right now, looking back at the chart this evening, and we should be waiting for deeper pullbacks, a possible spike in range here, for the most reliable trading opportunities tomorrow, unless the buyers can get a successful breakout pullback above the measured move tomorrow, That's really the only option we have right now to really see some strength here. Watch out for this strong move higher to develop into a spike in range or a spike in channel. And if it does turn into a spike in range or a spike in channel, keep focused on buying low, and taking profit at the highs. There are a number of really important clues on this chart tonight. First of all, the first thing you can see right now is this is a lazy channel. And, we talk about this all the time in the newsletter. I'm always looking for kind of a 45-degree angle, Think about the screen here. 45-degree angle from the lower left to the upper right, or vice versa, whatever you want to call it, So what we're seeing right now is we're seeing a channel that's doing more like this, It's a lazy channel. And when we see these flat channels, it basically tells me that both sides of the market can participate. What do I mean by that? Well, what I mean by this is that the sellers can sell off the high and try to make a run back down to the low. Meanwhile, the buyers, they can buy the low and they can try to make a run back to the high, The sellers can then sell one tick above that high, One tick above that high, and without too much pain, they can bring this price right back down again. So even though the market is bullish, it's such a lazy bullish market, you can almost trade it reliably on both sides. Clearly there is a bull bias to this channel right now, but what I can see though is we've got overlapping reversal lines. It's not that 45-degree angle, When I see a market that does this, when I see a market that looks like this, you're not going to be making money to the sell side on this, We're holding above prior highs, You're not going to be able to sell a new high and get anything besides a big debit to your account at the end of the day. That's an example of an illustration of a market, that you can be a little bit more aggressive with because sellers aren't going to try to step into that freight train unless, of course, they don't like the money, hanging out in their account. That's the first thing I see. Real kind of lazy channel. That means right now you have to assume that not only are buyers taking profit at the highs right now, but sellers are most likely right now digging in now and trying to fade this move coming back down to that range. Look back in time, you can see, very little pain trying to sell off that high. At this point, very little pain trying to sell off that high. Both buyers and sellers can participate in this market, and that means you don't want to be buying high. That's really the first thing that I see right away. Okay. The second thing that really stands out is this big spike. Now, of course, it's a Tuesday evening. We've got API inventories, which we talk about the trading calendar in the beginner course here at School of Trade. We've got the API inventory number every Tuesday, assuming a Monday wasn't a holiday, of course. Monday holidays kind of mess with this. By the way, we have one next week, by the way. Columbus Day is next Monday. So next week, API will be on Wednesday. Inventory DOE will be on Thursday. We'll talk more about that next week or later on this week once we get there. Most important thing, though, is as long as Monday's on a holiday, Tuesday evening, we're going to get the API number at 4:30 p.m. Eastern Time. This is all based off of that big API number that came out. You'll notice I'm not referencing what the API number was. I really could care less. I could really care less what that API number really was. I don't need to know. It won't help me make any trading decisions. It's usually too late to make any money off it. It's heavily manipulated. I'd rather just look at the chart, right? So much easier. Okay, so with that is a spike. Okay, a strong bull move. Now, when we have a strong bull move that comes off of news, typically what's going to happen is one of these three scenarios. Spike and channel, spike and wedge, something like that. We're going to see one of those on gold in a moment, right? Spike and wedge, spike and channel. Or, of course, my favorite, of course, being the spike and range, right? The spike and range. Usually a spike and range will happen after a big, long run, right? We'll be talking about that on gold later on in this video. So these are three scenarios you want to be considering. None of these scenarios, right? Not one of these three scenarios tells you to buy the high, right? It doesn't. So we're going to talk about what if the price goes higher here. But right now, though, that's the first thing. We see a spike higher. And so we're expecting, unless they run this thing through that measured move and keep going, which is possible, we'll talk about that in a moment, it's likely going to end up turning into either a spike in channel, right, a spike in wedge, or a spike in channel, or a spike in range, which all of them are now telling me right now, buy those dips, buy below those prior swings. If it's going to be a spike in channel, right, we're looking to find traps below prior swings. If it's a spike in wedge, traps below prior swings. If it's a spike in range, it's easy. Buy the low. Look for failures to buy the low right back up. We go over all these details in our intermediate course here at School of Trade. And again, it's just when we see a real strong spike like this, and you can already see, this may end up being, there's your spike in wedge. Right, I would guess here maybe that low, that high, right? There's your spike in range. It's difficult for me to tell ahead of time. Once we have some more candles on this chart, we'll know more. And of course, the real easy one is that spike in channel, right? Pulls back, new high. That'll turn into your spike in channel. So all of this pretty much tells us the same thing. We're bullish. We're looking to keep going higher here. But don't buy into that high. Don't buy into that high, right? Look for that trap low. Look for the price to, again, if we find ourselves tomorrow morning sitting inside of a trading range like this, now I know exactly what my plan is, right? I'm going to look to pick off those lows and send it back to the high, right? Pick off those lows, send it back to the high. Focus on buying low rather than buying high. Now, what is the scenario where you'd want to buy high, right? Well, that is a very good. We need to be prepared for this, and it's definitely may happen here because it's a very strong move, and obviously with a strong move, the odds are very high here that we get back to retest the high after a pullback, right? And there are decent odds that we end up doubling this thing up. So if you take this strong spike higher here, right? It's all based on news. You double that thing up right now, and now you've got a pretty decent run. Now, obviously, I can't predict how far this thing will pull back, but let's just say, for example, that we pull back to the low of that possible channel or possible range, right, and then we double up, right? So break up, we go into a range here, we trap low, and we end up punching higher here, right? That'll be a target. All I'm doing is I'm simply doubling up that strong spike. It's pretty much all we have to work with right now, let's be honest. So with that said, how do we, right, we know the plan here, right? So buyers are going to want to buy low, right? Buyers want to buy low, but what if it doesn't go low? We'll look at gold in the moment here, and you're going to see a market that didn't want to go high today, right? If it wants to go higher here without pulling back here, it's pretty simple. We got to see a strong breakout pullback, and that breakout pullback really needs to be strong enough to bring that moving average up and allow us to have the safety and comfort of buying. Safety and comfort? Where the hell did that come from? Right? Have the I took a long weekend. What can I say? Right? We're looking for a strong breakout pullback right above the high of that channel. What you don't want to do is strength and comfort, man. Sounds like a whiskey. So again, we don't want to look for this. We don't want to get above the measured move and then try to buy above there, right? We really want to see a strong enough move here right now, right, for that breakout, right, for that breakout pullback. All right, guys? So what are the buyers to do right now? Plan's pretty easy for the buyers right now. I want to buy low. If the past on this chart doesn't